Vice Chair of CSRC, and Mr. Xuan Changneng, Deputy Administrator of SAFE. They will brief you on China's response to international outbreak and to stabilize the financial market, and they will answer your questions. First, let's welcome Deputy Governor Chen.
Good morning.
Under the unified leadership of the Party Central Committee with General Secretary Xi Jinping at its core, China is seeing improvement in its fight against the virus. More economic entities are resuming business, and people's daily life is gradually back onto the normal track. To meet the needs of epidemic control and resumption of business, we follow the policies and plans of the Party Central Committee and the State Council, and practice the monetary policy with appropriate pace. Our response was quick, and we rolled out several effective and targeted measures. The PBOC took proper measures in public market business and adopted several targeted cuts in the required reserve ratio to unleash short-term and mid to long-term liquidity, so as to ensure a proper and sufficient liquidity in the banking system. The financial market opened as scheduled and remained unstable. Through the provision of 300 billion yuan of special preferential loans and 500 billion yuan lines for inclusive relending and rediscount, the PBOC offered targeted support for epidemic response and resumption of business. The PBOC also worked with the CBIRC and other institutions to extend loans for hugely affected private companies to make sure that they can tide over this trying time and have a stable cash flow. Meanwhile, through guiding down the market interest rate, we help to reduce the financing costs for real economy. The aforementioned measures are producing positive results. China's financial system generally is operating steadily and efficiently. The expectation is stable. The service sector is growing, and the national economy is in rapid recovery, making a great contribution to the global economic and financial stability. In our fight against the virus, much of the financial service must be done at the front line. Many people working in the financial industry have worked very hard and even made a huge sacrifice. 1,137 people working in financial industry got infected and 42 lost their lives. In our response to the epidemic, following the leadership of the party, we strengthened party building and made concrete actions to express support of the financial sector. Many touching episodes were revealed, and many party members stood out to contribute to the epidemic response. Their efforts testify to their commitment of staying true to the founding aspiration and keeping their mission firmly in mind. As the virus spreads overseas, international financial market is becoming more volatile, and the downward pressure of the global economy is mounting. The situation of the world is posing a greater challenge to the Chinese economy. Right now, the epidemic in China is generally taken under control, and the real economy is improving, and the sound fundamental of the Chinese economy remains unchanged. We'll stay high-spirited and continue to follow the unified party leadership and decisions and plans of the Party Central Committee, and we'll make adjustments and responses following market and legal principles, and develop a keen understanding of the changes in domestic and overseas epidemic control and changes in economic trend. And considering China's reality in epidemic control and economic development, China will take an active part in international cooperation and to tackle the challenges and complexities in the current world. Thank you. Next, please, Mr. Zhou.
Friends from the press, good morning. Now COVID-19 is spreading in the world, which has caused great fluctuations of the international financial markets. This is closely followed by everyone. Under the strong leadership of the CPC Central Committee with Comrade Xi Jinping at its core, and with united efforts across the nation, notable progress has been made in epidemic response at home. Businesses are being reopened orderly, and work and life are being resumed. Following the unified decisions of the CPC Central Committee and State Council, the CBIRC has attached equal importance to epidemic response and financial services. We have taken a series of effective measures to guide banking and insurance institutes in support of reopening business and uphold financial stability. The sector has been performing steadily. Moving forward, we will follow on General Secretary Xi's instructions on coordinating on epidemic response and economic and social development, and follow closely the epidemic situation in the world and international financial markets. The bottom line is there shall be no systemic risks. While implementing adopted measures, we will ramp up policy reserves. We have the full confidence and capability to win this all-out and people's war against COVID-19 and maintain general economic and social stability. Mr. Li, please.
Good morning. The recent spread of COVID-19 in multiple countries has caused a significant fluctuation in international financial market. I know that you've been following closely the updates of the international financial market and in particular the development of the Chinese financial market. Under the leadership of the party's Central Committee, China is seeing improvement in epidemic control and the resumption of business. And it has provided a solid pillar for China's financial market. In contrast to the overseas market, the domestic financial market has been generally stable. A-share market has demonstrated strong resilience and risk resistance. Its range of fluctuation was relatively small, and the investor's choice has been generally rational. The performance was achieved through earnest implementation of the policies and plans laid out by the Party Central Committee and the State Council Financial Committee on reform and developing the financial sector. We have taken an active efforts to mitigate the risks. For example, deleveraging. The leveraged capital in stock market has reduced by 80% from its prime time in 2015. We also addressed the risk of share pledge by reducing the inventories and properly managing the increments. Major indicators are showing positive momentum. The number of enterprises with high risks of share pledge has dropped by 1/3 compared with the peak time. We also improved transaction monitoring to increase transparency and let the market develop a clear understanding of our monitoring efforts. And in 2019, we rolled out several new steps, including the establishment of the Sci-Tech Innovation Board and the registration-based system to open wider. Since the outbreak, we have worked out several documents together with other departments to make special arrangements for corporate fundraising in the capital market, supporting important regions and industries, and roll out fee cuts and exemption and more convenient services. The measures we take follow market rules and show the warmth of our regulations. They have helped companies and industries tide over this trying time and consolidate the basis for market operation. While we make sure a steady market operation, the capital market in China has functioned normally. With the coordination of the Financial Committee of the State Council, we have resolutely leveraged the role of market mechanisms and not exercised any administrative intervention. We have made sure the smooth operation of the financial market and the recovery of investors' confidence. In the first 2 months of this year, the total amount of exchange stock and bond financing reached 1.3 trillion yuan. 38 companies issued their IPO. 72.4 billion yuan of fund was raised, and the amount of refinancing reached 90.1 billion yuan. As for exchange bond market, 1.1 trillion yuan of bonds were issued, a 30% increase year-on-year. More importantly is that there is constant improvement in fighting the epidemic. And we have seen an obvious increase and improvement of all major indicators. Over 98% of listed companies have resumed operation, higher than the average national level. The liquidity in China's financial market is sufficient, and the valuation level stayed at a low point. The external impact will only be temporary, which will not change the steady growth of China's capital market. Next, please, Mr. Xuan Changno.
Morning, everyone. Since the outbreak, SAFE has acted on the important instructions of General Secretary Xi, followed the decisions of the Central Leading Group in response to the epidemic, and the guidance of the State Council of Financial Stability and Development Committee, coordinated epidemic response and economic and social development. We have supported the reopening of business and response to the epidemic. Figures show that despite the impacts, China's Forex market has been operating steadily this year. I will share with you mainly two things: the supporting policies and China's Forex market. First, what we have done. We have given top priority to epidemic control and the reopening of businesses, heed to the needs of market entities, help to resolve the problems concerning foreign exchange, and scaled up policy support. First, we continue to make effective use of green channels to support epidemic response and the reopening of businesses. Second, we have wound up the macroprudential adjustment parameter for larger space of foreign borrowing. On March the 12th, the PBOC and SAFE jointly released a document to raise the parameter from 1 to 1.25. The ceiling for cross-border financial risk weighting went up from 2 to 2.5 times of net asset, which has enlarged the space for foreign borrowing, excluding government financing platforms and real estate companies, which will help small companies and private companies to make use of multiple channels to raise funds. Third, we have extended the pilot program of foreign debt facilitation in support of cross-border financing of high-tech companies. The program has been extended to Shanghai, Hubei, Guangdong, and Shenzhen. Qualified high-tech companies can borrow no more than $5 million of foreign debt. We have further raised the facilitation of Haidian Park, Zhongguancun Science City to meet their demand for foreign capital and reduce their financial cost. Fourth, we have made use of the cross-border financing blockchain platform to help small and medium-sized companies. Second, China's Forex market. Since the beginning of this year, despite the impact of COVID-19, the cross-border capital movement has been generally stable and supply and demand basically balanced. First, the RMB exchange rate have been fluctuating two-way within a proper range. Since the beginning of this year, the exchange rate has been generally stable. By March 20th, the CNY onshore spot went down by 1.4%, USD went up by 5.2%, the emergency market currency index went down by 13.4%. To be more specific, in late February, there have been some international financial fluctuations from February the 21st to March the 20th. CNY went down by 0.7%, EMCI went down by 10%. In late March, the drop of RMB is much smaller than that of Euro, Pound, and other major currencies, which shows that against all currencies, particularly the currency of emerging markets, RMB has been performing steadily. Second, the supply and demand have been basically balanced. In the first 2 months, banks ran a $20.6 billion USD surplus in Forex trading, and non-banking sector ran a $18.7 billion surplus. Considering other factors, the supply and demand have been basically balanced. Fourth, foreign reserve has been generally stable. By the end of February, our foreign reserve was $2,106.7 billion US dollars. Because of the spread of COVID-19 and large drop of oil price, there have been growing fluctuations in international financial market. We will follow it more closely and proper address it. We will continue to follow the instructions of the CPC Central Committee and State Council, implement investment and trade facilitation measures, continue to improve business environment, and better serve real economy. We will further improve the two-pillared management framework of macroprudential plus microprudential, prevent risks brought by cross-border capital movement, and uphold our country's economic and financial safety. The floor is open for questions. Please state your affiliation before raising your question. From CNR, my question goes to Mr. Chen. Since late last year, CPI has been growing. What is your take on this? And can the monetary policy strike a balance between steady growth and inflation control?
Thank you for your question. According to the law on the People's Bank of China, the ultimate goal of China's monetary policy is to maintain the stability of the value of the currency and to promote economic growth. Thus, the top priority of the central bank is to maintain the stability of the currency value, to maintain price stability at home and the basic stability of RMB exchange rate at an adaptive and equilibrium level. Price stability is related to people's basic needs and daily lives. Therefore, the PBOC has always attached great importance to making and implementing related policies. In 2019, China's CPI rose by 2.9% year-on-year. The increase was mainly driven by structural reasons, by the insufficient supply of food such as pork. With the introduction of a number of measures to stabilize supply and price stability and to guide expectations, the CPI growth is generally controllable, and we have kept the stability of inflation expectations to prevent the hike of inflation expectations. And you mentioned the 5.3% increase of CPI in the first 2 months of this year. Indeed, this increase was driven by structural factors, adding to the impact of the epidemic on the supply side. So the impact will be structural and only temporary. In the short term, the impact of the epidemic may last for a while, but as business and production resume and the supplies of much-needed materials recover, and the supplies of pigs recover, the price rise will be expected to become moderate, and the increase will tend to decline quarter by quarter. Generally speaking, the level of price will be determined by the economic fundamental. Right now, China has a balanced supply and demand and a stable Chinese economy. There is no basis for long-term inflation or deflation. In 2020, the prudent monetary policy will be more flexible and proper, will develop a better understanding of the pace, intensity, and focus of our policies in view of the development of the epidemic. We'll make sure that the growth of M2 and social financing scale is in line with the nominal growth of GDP. And will ensure the basic stability of price level and guard against the simultaneous impacts of credit contraction and economic downturn. Will strike a balance between stable growth, risk prevention, and inflation control. Thank you. Next question, please. With Nikkei, 2 questions. Considering the recent volatility in the international stock market, China is, on the contrary, remains stable. What is the reason? Second question, there are people saying Chinese market is becoming a safe haven against the international financial market. I wonder what are the influx of foreign investment in the Chinese market. Thank you. Thank you very much. We're in an era of economic globalization. The volatility in the international financial market necessarily affects the Chinese domestic market, and it's only normal. And the direct investment from the international financial market could be summarized into 2 aspects. First is the panic of the international foreign investors to the Chinese domestic investors. And second is about the flow of capital. Indeed, we've seen a fluctuation of the domestic investors' confidence and expectations, but it has been stabilized. The impact will be limited because foreign investment does not count for a large share of the domestic stock market. Asia market, as I've said, has strong resilience and risk resistance, so the impact will only be limited. And also we have rolled out measures on the supply side, and also we've taken some measures in advance. So some risks and potential obstacles have already been removed and mitigated. And the stable Chinese market is also possible because of the following 2 aspects. First, the Asia market, the valuation level of the Asia market stays at a low point. And the yield rate of the Shanghai Composite market and other stock market remains low and has ample room to improve. And the liquidity in the Chinese market is sufficient. The risk is relatively low. And also at the same time, if we analyze the macro environment of the Chinese economy, China's epidemic control is in a different stages compared with the international community. So the risk of the epidemic has been caused by the epidemic has been digested by the market. I said that according to the survey in the first half of the month of March, over 98% of 2,700 listed companies have resumed operation. As for the situation of the small and medium-sized enterprises, they have also been optimistic about the resumption of business. Over 80% of staff have returned to their workplace. These are all positive signals. This is the basis for us to believe in a sound recovery of economic development. That's why I say the impact of the international financial market towards the domestic financial market is inevitable, is normal, but controllable and limited. As for the foreign investment percentage of the Chinese market, in the stock market, there has been a relatively large amount of capital outflow from the domestic market. But actually, since the beginning of this year, the net outflow of foreign capital from the domestic market is about 20 billion yuan. (2019) was the year that saw a huge concentration of inflow of foreign capital. That's why the number may look a bit large in amount, but actually it is not that much because the foreign capital only account for less than 4% of A share. So they have caused some impact to the A share market, but not to have a fundamental impact of the market. Thank you.
Just a few things. As have been said by Mr. Li, China's stock market is mainly invested by domestic investors. As you may know, the financing structure of China, indirect financing took up the lion's share. So the CBIRC will further deepen the reform of financial institutions and support more means of financing. As you may know, capital market relies on two things. First, steady and sustained supply. And second, investors, particularly institute investors. Now, insurance institutes have become the largest institute investors in China. Now they have made 18.8 trillion yuan of investment. And 2 trillion yuan of them are invested in stocks and funds. That's about 10.8% of the surplus of insurance. Despite the international volatility, China's stock market has maintained stability. The CBIRC has taken a lot of measures, and we will continue to support insurance companies to follow market-based rules and follow laws and regulations to conduct sustained and sound valued investment. We will also deepen the reform of institutions. Following prudential regulations, we will give them more flexibility. With those with good asset structures and repayment capabilities. In addition to the 30% of investment, they can make more investments. Of course, this relies on the precondition of good risk prevention. We will set up new firms and set up the third pillar for elderly care and supports the expansion of direct financing so as to contribute to the sound and steady development of China's capital markets. That's what I would like to say. Next question, please. From international market news, I have two questions. Now, 6 major banks in the world have opened swap lines with Fed to strengthen the liquidity of US dollars. Will the PBOC participate in similar global coordination? Second question goes to CBIRC. It's about the financial support in response to the epidemic and reopening of business. How will financial institutes help key businesses along the supply chain with liquidity support? Thank you.
Thank you for your question. General Secretary Xi Jinping stresses on multiple occasions that the world is a community with a shared future. The volatility of the international financial market has caused severe impact around the world, and we've seen the decline of stock market of many countries, including emerging economies. COVID-19 is hurting the world and also including the economies and financial sectors across the world. It is a common challenge faced by all countries. Despite that, China has not yet secured the final victory against the virus. We're overcoming the difficulties and providing assistance to other countries. We're seeing that the international outbreak is rapidly spreading, and the spread of the virus calls for a greater international coordination and cooperation of public health policy, trade policy, and fiscal and monetary policy to make our global response more effective and robust. As for your question about whether the PBOC will take part in similar global coordination, actually, since the outbreak, the PBOC has strengthened policy coordination with international organizations and major central banks through bilateral, regional, and multilateral channels. Governor Yi Gang of the PBOC had several phone calls with IMF Director Madame Georgieva, BIS General Manager Carstens, and the Fed Chair Mr. Powell. They discussed effective monetary and fiscal policy response in times of the epidemic. The PBOC also briefed central banks of G20 and major international financial institutions on the impact of the epidemic and China's response. This effective communication has been applauded by the international community. We notice that some countries are adopting similar measures to mitigate and offset the impact and stabilize their financial markets. G20 is a main platform for international macroeconomic policy coordination. And G20 has played a historic role since the 2008 financial crisis in coordinating global economic recovery. IMF is the core of the global financial safety net and has the responsibility to safeguard global financial stability. We support international multilateral platforms and institutions such as G20 and IMF to continue to play a central role in policy coordination and crisis rescue. We support them in playing the role to effectively control the international viral outbreak and to safeguard global economic stability.
We talked about the industrial chain. Thank you for your question. The resumption of industrial chain has shown a clear sign. The reopening of business have restructured the industrial chain, so no single company can complete the production of a product easily. You asked about the industrial chain, which is in the heart of the reopening of businesses. Those key businesses have a big role to play. In the upper and lower stream, there are many small, medium, and micro-sized companies. For example, there was this car company. It has over 500 upper and lower stream partners. Our banks provided them with the following services. First, we have ensured their normal functioning, and we have issued over 70 billion yuan of credit since they have a good repayment capability. So once they've got this money, they will pay their partners in the upper and lower stream in cash. Now we need to stay alert that those large key companies may occupy the interest of their upper and lower stream partners. So we will ensure the interest of small and micro-sized companies. We also need to see that the orderly functioning of their financing models. We have made better use of big data, blockchain, and other technologies to provide financing service for small and micro-sized companies. You may also be interested in the industrial chain. The banking and insurance sector is just one example. I want to say that we have adopted a series of policies. First, we have support the epidemic response business to resume and expand productivity. And we have made flexible arrangements for personal consumption loans, including credit card, car loans, and mortgage. Third, we have provisionally extended loan repayments to help qualified businesses to overcome the difficulties they face. Fourth, we have scaled up credit support for private and small and medium micro-sized companies to help them to cut financing costs. And fifth, we have developed financial services along the supply chain to ease the pressure on companies in the upper and lower stream. Sixth, we have provided targeted support to projects that are key to macroeconomy and regional development. Now we have issued over 1.8 trillion yuan of credit in response to the epidemic since January the 25th. Provisional loan repayment extension has been applied to about 20% of the medium, small, and micro-sized companies. In the first 2 months, around 250 billion yuan new loans were issued to manufacturing, clearly larger than the same period of last year. Honoring their social responsibilities, the banking and insurance institutes have donated 2.7 billion yuan of cash and supplies. And some of their overseas branches have donated to over 20 countries and regions severely hit. For example, the Bank of China have purchased gloves, masks, and protection units. That's about 2.25 million pieces, and sent them to over 10 countries and regions. The Construction Bank and other banks are also making such an endeavor. We believe that under the strong leadership of the CPC Central Committee with Comrade Xi Jinping at its core, the situation at home is turning for the better and businesses are being reopened. Since the outbreak, we have ensured uninterrupted financial services. Our staff have been working on the very front line, and party members have set up good examples. Other than Hubei, 95% of our bank outlets are reopened, and over 97% of insurance outlets are reopened. And we have conducted flexible online financial services. We've conducted a poll recently, which shows that the activity rate of company banks have been increased. The flow of capital have been accelerated. At the beginning of March, the outflow activity rate of sampled small companies went up by 29 percentage points than late February, which shows the resumption of economic activity. Moving forward, we will, following the decisions of the CPC Central Committee and State Council, provide financial support in response to the epidemic and improve financial service quality to real economy. We will increase the amounts, reduce the cost, improve the quality, and expand the coverage of loans to help small and micro-sized companies, particularly to manufacturing. We need to complete the building of a moderately processed society in our respects this year. We will scale up support to poverty eradication. We will be problem, target, and demand-oriented, implement all measures. Despite our efforts, there will always be room for improvement, and companies will still face the problem in financing. We will try our best to improve the quality and effectiveness of our approaches and meet the demand of companies and the people. Thank you. Next question, please. We know that the PBOC and the CBIRC have raised the macroprudential adjustment parameter. How much support will be provided to business, and will this create the risk of foreign debt? In 2016, the PBOC and SAFE established a comprehensive macroprudential adjustment parameter and removed the pre-approval of foreign debt, which facilitated cross-border fundraising. This time, we raised the parameter from 1 to 1.25, which enlarged the space for foreign borrowing and reduced the financing cost. According to initial data, this adjustment will create tens of billions of dollars of support to companies. Now, small and medium-sized companies borrow from overseas through foreign banks and their associated companies. And the size is different due to their performance and prospects. After this adjustment, the ceiling for cross-border financial risk weighting went up from 2 to 2.5 times of net asset, and the financing space was enlarged by 25%, which will create tens of billions of dollars of support. This will help small and private companies to make both use of both domestic and international channels to raise funds and facilitate the reopening of businesses. Now, foreign interest rates are at a quite low level, so this will enlarge the space for foreign borrowing. This adjustment will not cause the large increase of foreign debt. Our foreign debt structure and the scale is reasonable and the risk is under control. The size of foreign borrowing is not very large, neither is the share. While facilitating cross-border fundraising, these adjustments will not trigger the large increase of foreign debt. I want to point it out that this adjustment does not apply to government financing platform and real estate companies. They are not included in this policy. Thank you. Next question, please. From CNBC. The first question is about the financial institutions' participation in international coordination. I want to follow up that in addition to communication, is there any other consideration or effort to stabilize the international financial market? The second question is that do you agree that there is expected increase of inflow into the Chinese market? How will you balance the strengthening of RMB and its negative impact on foreign trade companies? Thank you.
Thank you for your question. We've seen the international outbreak of the epidemic, and affected by the epidemic, the international financial market becomes more volatile. Indeed, we've seen a 30% decline on average across the world's stock market. And now it has drawn the attention of the whole world. I think it's too early for us to say that the world has entered into a financial crisis. Because if we want to arrive at the conclusion, it depends on at least three aspects. First is if there's any panic caused decline in the financial market. Second, if there are falls of a large number of financial institutions. And third, if the real economy across the world is affected and even devastated. And we've seen that in response to the epidemic and the volatility of the market, many countries have introduced some measures to deal with the volatility, and the effects of the measures remain to be seen. Just now, Vice Chair of the CSRC, Mr. Li Chao, said that the impact of the international financial market may be transmitted through the domestic financial market in three channels, namely the pessimism of the international market transmitted through the domestic market in the form of expectation. Second is the capital outflow from the international or domestic market. Third is the deterioration of the balance sheet of the international market may be conveyed to the domestic market. But as we can see, after the volatility of the international market, the Chinese market has shown a high degree of stability, and the fluctuation was relatively small. Now, the Chinese domestic market, financial market, is stable and normal, and the expectation is also stable and normal. We have sufficient tool and space reserved for the domestic financial market. We've made these achievements because we have resolved and prevented major financial risks. We have rolled out structural reforms, and we have opened the financial industry. Another reason is that the financial market opened on schedule, and the infrastructure of various financial markets operated steadily and safely, and the market confidence was greatly boosted. On top of that, in the face of the epidemic, we've adopted flexible and proper monetary policy and financial regulatory policy. We have given precise and targeted support to the real economy, especially those small and medium-sized enterprises. In the face of a volatile international financial market, we will follow the guidance of the State Council Financial Committee and focus on two aspects. First, do our own things well. After 7 years of rapid development, China is now a major country in finance. We have the world's largest market of credit and Forex reserves. We have the second largest market of stock, bond, and insurance. Thus, it is a significant contribution to global financial stability to support the rapid and orderly recovery of the Chinese economy and the sustained and stable operation of the Chinese financial market. Second, to actively participate in international macroeconomic policy coordination. By closely following the international financial market, we need to conduct a thorough study of the inherent law of this round of economic fluctuation, and combined with China's previous policy experience in dealing with the epidemic, we will give constructive inputs to international coordination, and we will support the developing countries who have been hugely affected by the epidemic. With joint efforts, we will secure the stable international financial market. Next question, please. We've seen that since last year, the CSRC has rolled out several new measures to open the capital market. We wonder, as the international epidemic breaks out, will there be a slowdown in our opening up process? Generally, our reform and open up measures of the capital market will not be affected. Actually, the establishment of the China's capital market is a product of reform and open up policy. It has been 30 years since we established the capital market. Now, as we become more and more mature, the market will become more and more stable. The more we reform and open, the more stable the market will become. The less we do, the more vulnerable the market will be. The focus of our policy now is to better leverage the role of the capital market. Indeed, we have some weak links and short blanks in this aspect. That's why we will advance the reform and open up of the capital market. As for the reform of the China export, we have taken some serious and thorough research and studies and solicit opinions about the China export reform. And the registration-based system will be one of our pivots. information disclosure, exit and entry, registration, and insurance will all be taken into account in our reform package. Preparation is going underway. And also, following the 12 important measures that we have already published, we'll work on the better service of institutions, the protection of consumer rights, increasing transparency, and other measures to create a better environment. We'll try to build a well-regulated, transparent, open, and orderly capital market. As for the open up, mainly two aspects: the opening up of market in terms of the build-up of institutional arrangements, systems, and regulations, and diversify the products of investment. Second is the open up of access. In 2019, we have already verified and checked some listed companies invested by foreign capitals. And also we have announced that from April 1st, 2020, the cap on foreign ownership in securities and fund management companies will be removed. So we are resolute in advancing reform and open up of the capital market. With Reuters, the Fed emergency interest cuts to zero will spur the interest cuts and reserved ratio cuts of the PBOC, and how could China defend against the externally generated risks? Thank you very much for your question. Actually, countries around the world have been adopting measures to increase liquidity and reduce the financing cost of the real economy after the outbreak. A significant interest cut is one of the toolkits. And some countries, in order to maintain their currency stability, they increase their interest rates. For China, since the outbreak of the epidemic, we have taken into account the reality of China and the legal framework. We have supported the epidemic control and the resumption of business and production. China's monetary policy has been adjusted as follows. First is the 300 billion yuan of special loans and re-lending. We have helped over 5,000 companies using these special loans.
Over 200 billion yuan of loans have been issued, and the actual financing cost is about 1.27%. And we have the 500 billion yuan re-lending and rediscount to support the reopening of MSMEs. Now, over 130 billion yuan concessional loans have been issued by local banks, and the interest rate is clearly lower than the required 4.55%. And third, we have guided down market interest rate and loan rates. Now, the general loan rate is 5.49%. This is 0.61 percentage points smaller than before the reform of LPR. With the structural monetary policy, the policies to increase liquidity, and other policy support, China's real economy is enjoying a marginal improvement. According to the transaction data since the beginning of March, including savings and loans, the real economy is enjoying a marginal improvement. We expect that in the second quarter, economic indicators will improve notably. And the economic growth will soon return to around potential output. Moving forward, the monetary policy will pay attention to the following. First, we will pay attention to the strength, focus, and rhythm of the policy in different time periods and keep the liquidity reasonably ample. We will work to see that the growth of M2 and the social fundraising is in line with the growth of nominal GDP and is a little bit higher. In February, M2 went up by 8.8% year-on-year, and social financing reserve went up by 10.7% year-on-year, which show the orientation of our monetary policy. Second, we will make the good use of the structural monetary policy. The 300 billion yuan special relending and the 500 billion yuan relending and rediscount will be used to guide financial institutes to provide special support to core businesses in the supply chain and their upper and lower stream MSMEs. We have also the inclusive and targeted rate cuts and extra rate cuts for shareholding banks, which will provide a stronger stimulus. These policies will be more effectively implemented. Third, we will continue to leverage the role of policy financing. We will make effective use of the 350 billion yuan of special credit line. With concessional loans, we will provide credit support to small and micro-sized companies, to spring farming, to hog farming, to foreign trade, particularly international supply chain. Fourth, we will scale up support for medium and small-sized banks in terms of capital replenishment and issuance of financial bond to increase their willingness and capability to issue loans. Last but not least, we will continue to advance the LPR reform so that we will see a going down of loan rate in the market. We will guide the banking system to appropriately surrender some of its profits to real economy so that the stability of economy and financing can be mutually reinforcing. Next question, please. From China News Agency. the international financial fluctuation has created increasing downward pressure for domestic economy. I wonder what the CBIRC will do in response. Thank you for your question. The volatility in the international financial markets has caused a growing downward pressure on the Chinese economy. Our assessment is that this will have some impact on our banking and insurance sector, but generally speaking, the impact will not be large. First, the thing is, the banking and insurance sector has been running steadily, with no sudden outbreak of risks or any signs of that. Second, as the epidemic situation at home is turning for the better, I think our sector will continue to maintain a good momentum of sound and steady development. To prevent the financial risk is an internal task for the financing sector. Since the National Financial Work Conference, we have given top priority to preventing financial risks, and notable progress has been made. For example, the macro leverage ratio has maintained generally stable, and financial risks are now being reined in. In the last 3 years, we have addressed 5.8 trillion yuan of bad loans. We have reduced 16 trillion yuan of high-risk transactions, including shadow banking and cross-asset financing, and properly handled financial institutes in question. And we have greatly brought down the risk of P2P lending. The number of P2P platforms in operation has been cut by nearly 90% compared with 3 years ago. A number of cases of illegal financing have been handled in strict accordance with law. The order of the financial market has been turning for the better. By deepening the supply-side structural reform in the financing sector, open up and improving the corporate management of banking and insurance institutes. Now the trend of this sector is to focus on their main business. The progress we made have laid a good foundation for the banking and insurance sector to develop steadily and address challenges. Facts and figures speak louder. According to the latest data, in the first 2 months, 4.2 trillion yuan of new yuan loans were issued, with a year-on-year increase of 130.8 billion yuan, which is a great support to epidemic response and economic development. As you may know, some companies and the real economy are affected by the epidemic, but the financial data shows that the bad loan rate of banks at the end of February only went up by 0.06 percentage point compared with the beginning of this year, standing at 2.08%. Now, banks have 6 trillion yuan in reserves and provisions. Their provision coverage ratio was 181%, which means that 181 yuan in provision for per 100 yuan of bad loans. And the capital adequacy ratio was 14.6%. Solvency adequacy ratio was 247%. So they are quite capable and resourceful in fending off and responding to risks. We will continue to secure the victory in preventing financial risks, deepen supply-side structural reform, and work for the high-quality development of this sector. We will take multi-pronged approaches to more effectively address non-performing loans, properly handle high-risk disputes, continue to address shadow banks, and reduce high-risk businesses. Second, we will work to ensure that housing is for living in, not speculation, for the sound and steady development of the real estate company. We will collaborate with local governments to properly handle their invisible debts. Third, We will further advance the campaign on online lending and better regulate online insurance. Fourth, we will continue to improve corporate governance of banks and insurance institutes, particularly equity management, because some medium and small-sized institutes don't have very regulated equity management. The company may even become a cash machine for some large shareholders. So we will guide this process and handle those personnel who broke laws and regulations in strict accordance with law. Fifth, we will support these institutes to replenish their capital through various means to increase their capital strength. Sixth, we will deepen the reform of commercial banks and rural credit cooperatives and explore reform proposals for financial asset management companies. We will guide the proper transition of asset management and trusting business. We will further open up, better implement already adopted policies. Eighth, we will strengthen party building and step up efforts to combat corruption. We have handled some corruption cases with lessons learned and cost paid. We will keep up the high pressure, implement the key decisions of the CPC Central Committee. A stable economy is a precondition of stable finance. From the economic fundamentals, China's positive long-term trajectory has not changed. The COVID-19 has fully shown the institutional advantage of socialism with Chinese characteristics. From the long run, we have a large domestic market, full-fledged industries, and high-quality human resources, as well as a large space for urbanization. So our economy has a strong resilience and great potential. So we will work for the reinforcing of economy and finance for positive interactions. So the most important things now is to keep our own house in order. We believe that under the correct leadership of the CPC Central Committee, we have the capability to respond to the risks and challenges in development and maintain sound and steady economic development. Next question, please. Since the outbreak, what measures has the PBOC taken to deal with the increase of risk in China's bond market, and what more will be done?
The bond market is an important part of China's direct financing. It is very important. The outbreak has not directly increased the default rate of the bond market. And the external impact of the international market has not caused the fluctuation of the Chinese bond market. So the bond market is running smoothly and normally. Since February, the scale of default in the Chinese bond market has remained at a normal level, and the number of business owners who have defaulted for the first time has decreased significantly. And we have worked in the following three aspects together with the Association of Interbank Market Traders. First is to improve the fast track for registration and insurance, especially for those heavily infected by the epidemic. if they want to renew their service, we have helped them to defuse the risk of the succession of companies' operation funds. In February, the enterprises issued about 750 billion yuan of bonds, marking a 2.1 times that of the same period last year. Second, we provided convenience and more preferential financing conditions. We extended the validity period of registration of filing and increased fee cuts and exemption for companies and agencies in terms of their issuance, trading, and custody services. Third, we adopted diversified means to mitigate the risks of default in advance. On the basis of market and legal principles, we carried out extension and swap work for enterprises to resolve the default risk in advance. Since February, about 5.1 billion yuan of bonds have been processed through various means in the interbank market. The three aspects are the measures we take in this special time, and they are producing positive results, and they have stabilized the bond market. Next, we'll closely follow the industries that were hit hard by the epidemic, such as traditional service sector, labor-intensive manufacturing, and transportation. Then we'll improve the mechanism for dealing with bond default and maintain the stability of the bond market. We'll provide strong support for epidemic control and business and production resumption. Thank you. Last question, please. Xinhua News Agency. 2 questions. First, what will the epidemic cause to the Forex rate of China? And we see the depreciation of the RMB against the US dollars. I wonder, will there be a huge outflow of cross-border capital? The RMB exchange rate is of great interest to many people. And we know that the exchange rate of China is based on market demand and supply, and a floating exchange rate system taking into account a basket of currencies. The market plays a decisive role in determining the exchange rate. We've seen the exchange rate going 2 directions, both ups and downs over these years, and they are all driven by market factors. The recent outbreak of the epidemic has caused fluctuations in international exchange market. The RMB has also been affected, but generally speaking, it has been stable at an adaptive and equilibrium level. The depreciation of euro against US dollar has been 4.7%, and the sterling even more significant, to depreciation by 12% against the US dollar. So relatively speaking, the RMB, which only depreciated by 1.8%, is relatively smaller. And the RMB, in generally speaking, has appreciated by 4.75% on a general term. So we expect that the RMB exchange rate against the US dollar will continue to move both up and down according to the market condition, and our expectation remains stable. In the long term, the RMB exchange rate will be determined by the economic fundamental, and the economic fundamental in China has been stable. As China's economy improves and the business operation production resume, China will stay unchanged about its sound economic fundamentals, which will provide a solid support for a stable RMB exchange rate. And also we've seen a normal operation of the Chinese currency market, and China has sufficient reserve of foreign exchange. They have provided a strong support for the stable RMB exchange rate.
Just a few things to add. As COVID-19 is spreading around the world, the international market has seen growing volatility. To prevent risks, USDX has been growing rapidly from March the 10th to 19th. This grown by 6.8% despite the growing external uncertainties. Telling from the RMB exchange rate and market supply and demand, our cross-border capital movement has the condition to maintain overall stability. First, the increase of USDX is caused by the lack of liquidity of dollar, which is a technical increase. It is not driven by the economic fundamentals of the U.S. The market needs to prevent risks, and large number of investors want to get hold of cash, which caused the lack of liquidity and the technical increase. In terms of pricing, transaction, and other parts, USD took up over 60% of the process. So this is an important reason for the rapid increase of USDX. Second, RMB has been performing quite steadily against all currencies. As the USD is strengthening, other currencies are weakening. From March the 10th to the 19th, Euro and Sterling went down by 6.6% and 12.5%. EMCI went down by 3%, while CNI went down by only 2%, which shows that the weakening of RMB is because of the strengthening of USD, but the decrease is smaller than major international currencies and other emerging market currencies. And against a basket of currencies, the CNY actually rallied by 2.7%, and our Forex supply and demand have maintained general balance. Our banks ran a 14.2 billion surplus in Forex trading, and non-banking sectors ran a 9.6 billion surplus in dollars. So the demand and supply are actually balanced, and market entities have acted rationally. They sell it high and buy it low, which shows that as a pricing factor, exchange rate has played an effective role in adjusting market supply and demand. So the supply and demand is still balanced since the beginning of March. The lack of liquidity and increase of USDX will inevitably affect China and other emerging economies. We will follow the situation more closely and address it prudently. From the mid and long-term perspective, China's economic fundamentals and the financial conditions will provide strong support for cross-border fund movement. The exchange rate of RMB will fluctuate two-way within a proper range without a large degree of devaluation. First, the epidemic response situation at home is turning for the better. Businesses are being reopened. Trade are being resumed, and the macro policies are scaling up the support for real economy. Second, other major economies have been introducing zero or near zero interest rate, while China's interest rate has been stable. The rate difference is still large, which increased the value of RMB as an asset. Federal Reserve cut rates by twice. From February the 20th to the 19th, the rate difference daily was about 1.72%. That's about 4 basic points higher than the first month, which has increased the attraction of RMB as an investment asset. Third, with the improvement of the RMB exchange rate formulation mechanism and the strengthening of its flexibility, it will be more effectively fend off and address the risks of cross-border fund movement. We believe that under the strong leadership of the CPC Central Committee with Comrade Xi Jinping at its core, as the situation at home is improving, business are being reopened, the economy has sustained a positive trajectory, we will complete the goal of fending off financial risks. This is the end of today's press conference. Thank you. Thank you all.